Chinese stocks look good for the first time in a number of months. And this is very interesting because I notice a pattern which looks like a win. So, what exactly is Chinese stocks doing? Well, China factory activities expand for the first time in 6 months, getting over 50.0, which means they're beating economist forecasts. There's also non manufacturing gauge, which increased versus the previous month. And China's been a dog. It's been going down for so long. And this chart can pretty much show us that we're now back to where we were at roughly 2009. There's been no gains for, call it like 14, 15 years. That's a really long time. But other charts look similar. Here we're looking at EEM or emerging markets. I see that similar W pattern setting up here. But as these charts start to look good, notably China, emerging markets, what doesn't look good? Well, it's ARK, and it's down pretty heavy today. So what I would really want to talk about are the stocks that are looking good and the stocks that are looking bad now that we're opening up a new quarter, because after the end of the quarter and the 13F filings come out, now you're able to go buy what you want. You got money. You've sold what you don't want to own anymore, and now you want to go buy what you own. So this will be important because we're noting that the dollar is up today, yields are up today, volatility is up today. And I'm not talking a little bit. Let's have a quick look at that. So if we have a look here, the dollar is up by 0.5% today. That's pretty big. Like on the week, that's a breakout. We talked about this on the weekend, and right now it looks like it's putting in that same W where it just wants to go higher. If we look here to VIX is currently up by 5%, back into the teens, or 13 here at 13.66. And then finally, if we look here to the 10-year note, it's right against an area that gets me a little bit uncomfortable as a bull, because 4.31 is a critical area on the chart for me. I did go through all this on the weekend review, so just make sure you watch until the end if you want to see those notes. But as we're opening up a new month here, we also talked about exactly what's here. Pause the video if you want to read it, or watch the weekend deep dive at the end. But we're looking for a dip of 1%, 4%, and 8%. And until we get that, I briefly showed you a couple of notes, but what I want to focus on instead is just looking to the heat map for today. If we have a look here, what is notably green? Well, what I notice is that Google is up by 3.02%. That's a pretty big move. We also notice that Micron is up pretty nice today. Micron's up by 5.4. AVGO and AMD are also up. There's not a lot that's really red, but Home Depot's down by 4. And we note that, what's this over here? Whatever SHW, Sherwin-Williams, is also down a little bit. But what I want to focus on are going to be those ETFs in a moment. On the monthly chart, monthly review, we also talked about how you want to run with the bulls until we make it to 62.50. So that's interesting. And what's happening? No one wants to be on the sidelines, but the US is starting to get a little bit stretched. So if we now go back here to FXI, there's a very little momentum right now. We notice a death cross. We notice that the chart is near the dungeon, which means the bottom of the chart. And frankly, it doesn't look good. But there's a couple of things we can look at in a moment here. And if you guys don't mind, please considering to smash that thumbs up or subscribe to the channel. I would greatly appreciate that. So as these ones look terrible, again, like if I look here to ARK, we briefly touched on that one at the beginning. But this thing has been so bad for so long, right? This is supposed to be growth. And it got cheaper today by about 1.6%. The chart is terrible. It's starting to point up, but man, this thing looks terrible. Head and shoulders, right? Head and shoulders, knees and toes, when the NASDAQ's like all the way up here, new all-time highs. So people are still ready to sell ARK innovations. And what are they willing to buy? Well, things like emerging markets, things like FXI. And these things are starting to curl up, right? They've tried a couple of times, 1, 2, 3 times. Maybe now we're finally going to get over this barrier and go higher. That's just what I'm noticing. I notice that a pattern is forming. It's not formed. So that's emerging markets. And over here on FXI, notice that same thing here. On the monthly, it's a little bit more evident, but on the weekly here, it looks really good. So I'm noticing this has people's attention, at least for today, on the first calendar day of the month. I'm noticing that they're buying everything up we don't want as stock market bulls. We notice that the dollar is up on the week. That's a breakout. I don't like that. Not going to lie. Looks like that same W I just showed you earlier on this chart. For the VIX, we talked about that one too. Let's just jump down here. What's interesting is that Bitcoin is actually down, but it's still above its previous all-time high here. So that looks constructive. However, it's down pretty red, like 2.3%. Ether's down by about 4.5%, but gold is actually up. And here's what's interesting. Let's have a look here at our daily chart, because what I want to show you is that we actually gapped up pretty big. We came down for a gap fill and bounced. So let's look and see what that looks like here. So, right, we came down for the gap build, boop, bounce, bounce, bounce. So now we're trying to recoup here in the last, I don't know, last couple of hours here. But this looks interesting because there's a huge divergence into the new quarter between gold and crypto. I would note that gold is also above its previous all-time highs, and the US dollar was the last one to join the all-time high club. So people up here like they want gold. Drop a comment and let me know what you think. Do you like gold? We talked about Google. And there you go, Google, right? New all-time highs. So people bid it up by 3% today. That's a pretty big move. And we note oh, actually, here's a look in hindsight. Jesus, Google, that's a bullish engulfing monthly candle. That's a really bullish candle here. So Google looks like strong. Bill Ackman quite like this one. I'd be curious on his 13F filing. And again, if you want to consider subscribing, I will update you on all of that. But as we look here, we're currently in a bullish engulfing monthly candle over the previous candle high. Man, this looks good. Not going to lie. And then what else do we have here that is notable? I had to look at a couple of these before, but SMH is up by about 1.3%. TLT is down by 2, right? So that's not good. We note that because the 10-year note is up. This one's inversely correlated or does the opposite thing. And then finally here, EWZ, one more that I find really interesting because EWZ is Brazil. It's similar to emerging markets or China, but it might be the new one which could lead the pack here. What I notice is an attempt to break out. We note the red line here or the downtrend, which has lasted for during that same period. China's all the way back here at 2008, 2009 numbers, just like we are here for EWZ. But it looks like it might be trying to break out. It's backtesting the 50 and the in the downtrend. If it can push off, I could see it run to the 200 MA here. That's a pretty nice move from about 30 to about 45, or a roughly 50% move there. So that'd be like a pretty nice move. So if the US is going to drag the rest of the world up, those are the exact charts I would be looking for to see some follow through or some bid buying. All right, that's it for today's video. You can check out the left-hand side for that weekend review. If not, I'll see you tomorrow at 9:15 a.m. Thanks so much.